Hello, everybody, and welcome to a special Fat Profits webinar. My name is Patrick Ganley. I'm here with Edward Ellum, our Senior Account Manager. Ed, how are you today?
Hello, Pat. Happy to be here presenting this webinar today. We've got quite a bit to go through, and hopefully we can explain our service a little bit more to some of the newcomers on this presentation today.
Okay, so before we get into it, let's just get rid of a few housekeeping items at the moment. All the information presented today is on a general advice basis. Before acting on any of the recommendations or taking any of the advice that you may get in this presentation, we strongly advise you to consult with your financial advisor. And please note that past performance is no indication of future returns. So during the session, you will have time to ask comment or ask questions. You will be prompted with the orange arrow as to where you can put your questions in, and we will endeavor to get as many of the questions answered as possible during the presentation. So that will take us over again. Patrick and Edward, our disclaimer, we've gone through. You now know how to do the comments and questions during the presentation. And I think at this point in time, we will start with the Fat Profits follow the herd or hunt it is something that we talk about quite a bit. If people follow the herd, then sometimes they don't get the returns they could. So we constantly look to think a little bit outside the box. So the first part of the presentation today, Ed and I thought we'd launch a little bit of a poll at the beginning for all those that are in attendance. And the poll is, are you bullish or bearish on the market? So rather than us telling you our view, which we'll do some of that in the in the presentation today, we thought we'd start off by asking all the investors that join us today this question. So we've popped the poll up. You have a chance to answer. We've got a few people clicking in now. We got a few people still looking to join the webcast, so we'll leave that poll open just for a little bit longer. Just give it a few minutes or a few seconds. We're not going to wait minutes, but we still have a few people clicking on their comments, so that's good, and we're getting some good feedback. So at this point in time, we will close the poll, and thank you to all of those people attending today for participating in our first poll today around the market. So now we will get into the presentation, and we will start with the S&P 500. Ed, you know, we've seen the markets push to the upside. The S&P 500 has been performing quite strongly. We can see from this chart that the S&P 500 has begun to break out of a range and is pushing higher. Maybe you could just touch a little bit about this for a few minutes, and then we'll move forward.
Sure. It's obviously the rally's been led by the larger tech companies in the US, in particular Nvidia. It's a tech-led rally. It's the top 7 or 8 companies that are controlling this index. Same with the Nasdaq. So they've set the trend, and the rest of the market has basically followed. So they are leading the bull charge, I guess. And it is a primary bull market that we are seeing at the moment, or experiencing. Fat Profits have obviously corrected that chart and put in a 5 to 10% correction between now and May, potentially overflowing to June. So we are expecting that chart to correct. But at the moment, as long as the money stays in those top 7 or 8 tech stocks in the US, we could see it go a little bit higher before it actually consolidates.
And we think it's quite positive, and it's quite a positive setup. And as we move into 2024, or the next part of 2024, it's hard to believe we're pretty much almost done the first quarter. It's now the middle of March, but the markets keep moving along, and we keep finding opportunities for investors as we
Yeah.
look forward.
This is the best bull run we've seen probably since post-COVID at 2021. Again, it was led by the technology stocks in the US. And prior to that was the big rally of 2015 here in Australia, where it was the last time the bank stocks hit those record highs. So we have been in this territory before, but obviously we're in a different environment at the moment where interest rates are obviously high and looking to consolidate and potentially move downwards in the future, but that remains to be seen. And obviously we're still in that inflation story as well. So there's still quite a bit out there, but the positive thing is that most of our members' portfolios, what we're hearing on the phones, are doing quite well because they've stuck to the larger cap stocks, and that's been the key driver in the market.
Okay, and one of the things that we want to get across in the in the session today is we're very focused at the moment on the U.S. dollar, and the U.S. dollar seems to be coming down. And if we continue to see that U.S. dollar coming down, that will play into a lot of the themes that we have and drive a lot of the recommendations that we will be making to members in hope of getting on some winners and having everybody participate in some profits. So with the US dollar, we're positioned in the precious metals and gold. And as the US dollar comes off, which we're keeping a close eye on, we should see those precious metals and gold improve in value. And we're starting to see that now. You know, we've seen record gold prices in Australian dollar terms recently, and we've seen some moves in the gold stocks, but we don't think the moves in the gold stocks reflect the actual price of the gold price at the moment. And we think there's going to be a little bit of a catch up there as the US dollar comes off. So a little bit on the US. Now we thought we'd come into Australia and then talk a little bit about what's happening here locally, which a lot of investors will be interested in. We've got the ASX 200 here, which has been performing quite nicely. And Ed, maybe you could just touch a little bit on this chart and the ASX 200.
Yeah, so obviously we've just completed a reporting season, which was, I guess, 50-50 in the top ASX top 300 stocks. 50% of the stocks hit the mark and 50% didn't. So it was a mixed reporting season, but all in all, the market took it with a grain of salt and have held firm with their portfolios and the large cap stocks. So that's the key driver of the market. As long as the fund managers, the SMSFs, they keep holding the Wesfarmers, which are overvalued at around $66 at the moment. Valuations in the low 50s. There's quite a bit of that right across the top 50, including the big four banks. And we could see some profit taken at some point. So doesn't go up in straight lines, as you can see from this chart. There has been pullbacks along the way, but the curve is clearly favouring the upside at the moment for the ASX. So we could see this market go a little bit higher. We have seen some smaller cap and mid-cap cyclicals starting to move in line with what's happened in the US with the Russell Index. It's been one of the best performing indexes in the US market. So if the smaller caps, not all, but some key small caps keep playing catch up at the moment. Companies like the real ugly ducklings like ZipPay and BrainChip that were pretty much dead and buried 12 months ago. Some of these stocks have more than doubled and even tripled in value. So it shows that the market is selectively picking some of those smaller cap stocks. And if that trend continues, this index and the big four banks hold and the top 50 hold, we could see this index go higher from here and really test that 8,000 mark at some point this year.
Okay, so I thought we'd just talk a little bit about our services. That's why we're here today, to inform investors how profits may be able to help them with their investing. We're pretty excited about the markets. We think we're heading into a new bull market, which could last for a number of years. So now could be a very, very good opportunity for you to take on a service like Fat Profits. Some of the things we do, we provide investors with strategy and direction, which is quite important. We give them plenty of opportunities to see the types of strategy we're deploying when we're making our recommendation and the direction we think investors should be looking towards. We make specific stock recommendations. So if we like a stock, we'll come out and tell investors we like the company. We'll tell them we think they should buy it. We'll give them reasons as to why we think they should buy it. We'll back that up with both fundamental and technical analysis when we make those recommendations and place them in the website. All members, when they join, get a username and password. They can access the website. They can see the new recommendations in real time. They get a look at the existing portfolio of stocks, and you can see all of the stocks that we're covering at the moment, whether they're a buy, a hold, or we've got a traffic light on them, meaning we're waiting to enter these positions at some point in time. I just want to go back 1 minute. I just got ahead of myself. There. We also do member webinars and podcasts. So each Thursday we do a webinar where members can log in. They can either come to a live session where they can watch the recording, whereby we'll cover what's been happening that week in the recommendations. And on the other week, we'll talk a little bit more about our macro strategy, which I do with Angus on the other Thursday. Midweek alerts, we'll send some information out if we think there's something members need to be alerted to, something's happened in one of our recommendations, we want to get the information out quickly. We'll send you an email, we'll highlight that market alert, and we'll give you any action that we think you should take. We do a fat wrap at the end of the week. This is just a one stop email that gives you all the information that we or pretty much all the information we did during the week. So if you were busy during the week and missed some things, you can read the fat wrap and you can pick up on the recommendations that we've made during the week. One of the parts of the service that members really like, because we have a lot of members looking for income, we do a dedicated income report, which we post to the website. We look to update that on a quarterly basis. That gives you a very good list of stocks that produce good yield and income. And it's a very, very popular report. It's very well read. It offers a lot of value to members. So that's a big selling point as to why Fat Profit Service may be for you. We're a web-based business, but we also know customer service is important. If you have any questions on any of the recommendations or the research, you can email us, members@fatprofits.com.au, or you can call us, 1-300-88-1177. So you have somebody you can talk to. If you're unsure about a recommendation, you're unsure about something we've written about, you've got us here. You can call up, we can talk to you, and hopefully we can help you through that. So Ed, I thought we'd start off, each morning we send out an email. Angus crafts the email in the morning. We call it our Fat Chat. Comes out typically before the market opens and gives members an overview of what's happened overnight. And in this is where we're giving some strategy and direction for the members who like to read this in the morning. So Ed, maybe you could just touch a little bit on the Fat Chat.
Yeah, so we cover quite a few stocks in each market. We review the key stocks from the day before and do some of our own commentary and add some of our forward perspective on these stocks. So Chalice is a stock that we cover. We've made a lot of money for members in the past, but unfortunately, the stock did correct, along with the entire lithium sector last year. So there is value there under the ground, but it's the cost of producing and building infrastructure has pulled this stock back. So that's just one example, but we're always constantly touching on our stocks, but not only stocks that we have in our preferred portfolio, but other stocks in the market. There are stocks here in this upcoming dividend report, for instance, which we touch on each day. And this is from the ASX. These are upcoming dividends this month. Reporting season's obviously been declared now, and each company has posted their dividends, and they'll be paid to investors ongoing. So there's quite a big inflow of funds coming in for our members this month and for investors, which they'll be looking at potentially redeploying into new opportunities, or accumulating their current stocks in their own portfolios, or looking for new opportunities to buy, which is what we can present as the year progresses. So just with the daily Fat Chat again, it is our main report. We do publish daily now, and then on a Sunday we'll update a summary of any stocks that we have updated during the week, just in case members have been busy. Then they can just click on any of those and go straight into the website. So the daily report is our most popular report. It provides guidance and direction. It's got quite a bit of macro, but we do cover a lot of stocks in each market, leading with the US, Australia, UK, and Europe. And we have a lot of accountants and even financial planners that actually subscribe to this particular report and use it to advise their clients as well. So as a third party source of information. So it's quite a popular report. So we give it directly to our members, and a lot of those stocks that are updated with some specifics in detail, we also declare whether they're in our separately managed accounts. So we actually invest real money in these stocks. So skin in the game is the key for Fat Profits. It's the reason we've been around for almost 24 years now. Most people trust us because we actually have money in the market. There are a lot of other services out there that provide insights, but they don't actually have any real money in the market. Okay, so we'll just move on to sector reviews, Pat, and
Yeah,
we'll start.
we thought this would be a good way to go. We're going to touch on a few sectors that we're interested in at the moment. One of the sectors is the financials. We just recently put out a banking report on the banks and what our view is there. So new members coming on will get exposure to that banking report and the big banks in there that we have recommendations on and what they are. But we're just not looking at the big banks when we talk about financials. We're also looking for some smaller companies that we think are going to do quite well and are positioned well for investors to make money in. And we're going to give you one of the ones that we've recently recommended, Tyro Payments, listed on the ASX. TYR is the code. We got a buy recommendation on this stock. Ed, you know a little bit about this. Maybe you could just touch on a couple points about Tyro.
Yeah, like it has struggled in recent times on the charts. The stock has struggled to break out, but it has turned a corner. A little while back, it touched the high 80-cent mark. It's entrenched over $1 at the moment. But the key fundamentals there, if you just want to go back one slide, Pat, if we can. The key fundamentals there is the growth. Okay, so we're looking at a normalized gross profit of 10.5%, and also the gap. If you want to go back, sorry, just done that slide again. Can we go back again? Tyro Payments. Can we go back one slide? Or have we missed it? Okay, we missed it. No, we're back. All right. All right. So what I want to differentiate is the first half of 24 versus the first half of 23. The total transaction value, even in a cost of living crisis, has actually increased from 21 to 22 billion. The payments gross profit has increased, the banking gross profit has increased, and the corporate gross profit has increased. They are key numbers, right? Operating expenses normalized have also slightly increased with inflation. Lending and non-lending losses, there's 77.5% growth there as well. Total expenses, the growth, 2.8%. So they've slightly increased as well with the turnover. Okay, so these numbers are actually quite positive for a small company. It does make it a potential takeover target at some point. The reason for that is that, and our attraction to Tyro, is that they do have an actual banking license. That is a key fundamental for this particular business. They're huge in the FPOS business. If you go to most small businesses, cafes, takeaways, coffee shops, you will see that they're using Tyro payment systems, the Tyro FPOS machines. So this business is growing. So it went through a huge amount of growth previously, which was not sustained, and then we had 12 rate rises. So with those rate rises, you can see the chart there from 2021 right through to 2022. There was consistent declines there. Now that we've had a bit of a consolidation with inflation, it's still there, but it has consolidated. We are seeing the charts turn to an upside trend. It is finding support every time and then continuing its path north. So we do see a potential. We don't do price targets here, potentially because we don't know. So there's no point creating that false illusion, but technically it does appear moving towards that $1.20 to $1.40 range within the next quarter. So we'll keep a close eye on that, and that's why we put a buy in the stock. It is still undervalued. Its valuation is closer to the $152 mark. So it's playing a bit of catch up on the charts at the moment. So we'll maintain the buy recommendation on Tyro.
And one of the other sectors that we've been focused on and we got interested in last year was uranium. We saw a pretty compelling supply and demand story where we saw supply low and demand growing around the world for uranium. And we got in there when the uranium prices were relatively low. Here's a chart here. Uranium soars amid rising demand for nuclear fuel. Price of radioactive metal has tripled over 5 years. We looked at this, we got into this, we saw uranium as being something that was going to be around for a while in the energy sector, and we looked at the best ways to kind of play uranium, and we saw two ways to do it. There was the ability to go in and do it via individual stocks listed on the stock exchange. And one of the ones we liked and we picked up here in Australia was Paladin. We've got it on the screen, ASX, PDN. We have a buy recommendation on Paladin. It's been performing pretty well since we put it in the portfolio, and we're going to continue to hold it, and maybe even, well, we got a buy on it now, but we can continue to track the uranium sector. We've also looked at a couple ETFs for members that we had buy recommendations on, and we put them into the portfolios as well. And those ETFs are a different way to play it, a bit more diversification. And both the ETFs that we have buy recommendations on now are doing quite well for members. And I thought we'd just pop this chart up here, Paladin, one of the companies we do like. Here's just a couple key points about what's going on at Paladin.
Yeah, they're going into production. Heinrich is their main mine, and that'll be going into production at the end of April, at a time where the uranium spot price is pretty much at an all-time high. Locally, our government, there's been quite a bit of debate going on as to why Australia is not looking at nuclear energy. Obviously, we've got the Greens there putting up a wall, and there is a bit of conjecture there, but it keeps popping its head out. The questions are always asked to our energy minister. At some point, they might cave in and potentially do a trial. It does take about 10 years to build a reactor, so it's not going to happen overnight, but there are other economies which are well advanced and looking to build reactors over the next few years. And this is where Paladin is going to benefit. So the stock's up, Pat, well over 50%, actually almost 100% since our initial recommendation. But it did hit a high of about 149 recently, and there was a bit of profit taking in that particular sector. So it's at an attractive level at the moment, and we will maintain a buy recommendation. It's a theme that we picked well over 7 or 8 months ago, and we got in pretty early to market. Our members bought this stock and the ETFs quite early that we cover, and they have made a lot of money in the short term. So it's been a good, quick dividend for our members, and we believe there's more to go. That's why we put a buy in the stock.
Yeah, a good thing to look at for members coming on board Fat Profits. These are the types of things that we look to uncover for you. We get out there, we look at it, we look at what's going on in supply and demand, we look at where we see the growth. We came out with these companies, Paladin and 2 ETFs that have performed very, very, very well for the members so far. And as you can see here with the chart, the stock has done quite well, as Ed said.
Yeah,
We
we've had a
got this
couple of
spot.
buys along the way. So the chart's looking pretty good, Pat.
Okay, so maybe you want to put that in your watch list, but we have a buy recommendation ordered in the portfolio. Next sector is gold. Gold is something that we're very interested in. We started off with the US dollar chart. We spoke about the US dollar. We spoke about the US dollar coming off. We continue to believe the US dollar will come off this year. And if we're right, then we think that's only going to do well for the gold stocks and commodities, and that's why we're pretty well positioned in that area with a number of recommendations that are live, but also another watch list of recommendations that we're looking to add to the portfolio as and when we see the time. So here you could see gold broke above near-term resistance. It's broken up. We think it could continue to rise. We think this only bodes well for the Australian gold producers, who will be coming up with some of their quarterly reports soon. And we should see some really, really hefty numbers coming out with revenues and cash flow. And we think that the gold producers, the Australian stocks, have not tracked the gold price higher. So we think there's going to be a catch up there at some point in time, but gold has been performing quite nicely for us. So that's the topic, Ed. Australian gold index is down nearly 35% from the 2021 highs above 9,600. So there still is catch up here, and there still is scope for this to go up higher, which would only do well for a lot of the recommendations we have in the portfolio.
There's plenty of value there in the gold stocks. It's just a matter of confidence from investors, in particular the fund managers. So we're obviously gone through a cost of living crisis. All these producers, whether it's gold, nickel, lithium, have all had their costs increase rapidly. The benefit is the spot price. So we've just seen the iron ore stocks benefit from a high spot price, which is currently corrected. And then previous to that, we've had copper, and a couple of years ago nickel, and then lithium, and they've all corrected. But at the moment, we're quite bullish on gold, obviously, iron ore to retrace and move upwards again, and also copper to continue on its current upward trend. So they're probably the three top commodities at the moment. We've also seen the oil price tick up as well. So gold, we've been gold, I wouldn't say gold bulls, but we've always had gold exposure since day one. Our first exposure was GOLD, which is the gold ETF. I remember I've been here for quite some time, but in the reports we started in the year 2000, gold was at $250 an ounce. So now we're at well over $2,100 an ounce US. So it's been a long-term, I guess, investment for us, which has delivered from time to time. It does go through cycles. So we've had the bearish cycles and we've had the bullish cycles. So we're back in the bullish cycle at the moment. So it is a good time to have a look at gold stocks for your portfolio. So just moving on to a couple of stocks that we cover here. Red 5, which we have done well from a small explorer, which has built infrastructure and now is a small producer, which is about to potentially merge with Silver Lake Resources and create a mid-tier producer in Australia, which will potentially pay some dividends down the track to investors. So this is all about cost synergies, reducing their operating costs, increasing their profitability, and creating a much larger company. So there's been a bit of this in the market at the moment. So these two appear to have agreed to a deal, which has to be passed by large investors and obviously the regulators as well. So first court hearing, mid to late April, so there's a little bit of time left to go. Booklets will come out to shareholders. There'll be a scheme meeting, second court hearing, and so forth. So the record date is mid to late May, and the implementation date is in June 2024. So at the moment, we're going to hold and we're going to ride this through. And if the merger goes ahead, we will initiate coverage with the new company, which should be Red 5. So
Okay.
moving on to gold stocks, Pat. Yep, continuing.
Okay, so we got another, as we said, we've got quite a number of gold stocks well positioned in the portfolio with current buy recommendations on them. We've given you the names of a few of them. Here's one that we've got in the portfolio: gold mining company, market capitalized 15.7 billion, solid performance in the December 2023 quarter, selling 613 ounces of gold at all-in sustaining cost of $18.24 an ounce. So if we continue to see the gold price going up, companies like this will just continue to benefit from the higher gold price, and we believe the share price will catch up and start to move higher. So this company is in the portfolio. If you become a member with us, you'll get the name of it. You'll be able to give us a call and we can step you through that particular stock. Here's a little bit of a chart on how it's performed. You can see it's continuing to trace higher. It's just moved higher, higher, higher. It kind of peaked, it came off a bit. We're now seeing it, head higher, and we're looking for a breakout here of this particular stock at some point in time.
Yeah. It's hit its production milestones. Yeah, some of its other peers in the same sector have struggled through, through the rate rises and labour shortages and inflation and rising costs. But this company has actually steamed ahead. So it's one of the better gold producers on the ASX. Most savvy investors will probably know which one it is, but we like to create a bit of a mystery here and have something to talk about later on when members join the service.
Okay, next sector, lithium. A lot of investors will be aware of lithium and its place in the market and how it's been performing. It's had some ups and downs, but again, we're continue to look at lithium. We've got a couple companies in the space. Here's one here, Ed, that we just put a traffic light on.
Yes.
So it's a stock we're looking at. We're looking for the right time, and we will be looking to put a buy recommendation on this company at some point in time. ASX, PLS, traffic light. It's a company that we like, and here's a little bit of text as to why we like it.
That's right, Pat. The big pause at the moment is the lithium spot price, which is at all-time lows. On the Chinese futures market recently, it tried to break out, and then there was a potential short squeeze on lithium companies in Australia, but that failed to eventuate, and I think they had two cracks at it. We saw a bit of a rally there in the sector, but these stocks have been beaten up. This one has actually held up quite well. I think its high was about 550 on the charts, but it has come back. So this is a very well cashed up business. It's a tier 1 asset, 34-year mine life. The big issue there is it can increase production, but they're probably going to scale back a bit like the rest at the moment and save some of those reserves for when that spot price potentially recovers in the future. But there is an abundance of lithium. All right, so there's a lot of lithium in the world. It's not a scarce commodity. There is plenty of it, and there is a ton of exploration for lithium all over the world. Canada, Argentina, Western Australia, it's everywhere. So there's plenty of it. These companies were early to market, Pilbara, so there was a merger there with another business, Galaxy. So they were well entrenched. They had forward contracts with China and the likes of Tesla, and they built a business around those forward contracts. So they built the infrastructure and moved into production. As they moved into full production, unfortunately, the spot price fell dramatically, almost 90% off its highs. So once that supply gets eaten through, it'll be interesting to see whether in future months or years the Chinese start rapidly buying up again, because a lot of their lithium has been secured in the short term, and that's put a lot of pressure on the lithium spot price. So the volumes have decreased. So there's a lot to play out in this sector, but this company is well positioned. We'll monitor it in the short term, and when we believe that spot price may or may not turn in the future, it'll be the right time to start buying the stock again. But last year, I remember it was the #1 day trader stock in the market. I mean, the volumes were huge on a daily basis. So yeah, the day traders enjoyed a good time with this particular company. And that may happen again in the future, but we try and avoid day trader stocks. So at the moment, it's stabilized, which is pretty good. We're not seeing that day trader activity on this particular company anymore, as we saw about 12 months ago. So we'll keep a hold on this one. We'll keep researching it, and we'll advise members accordingly. Have a look on the charts there. So it's actually held up quite well compared to the likes of, Liontown and some of the others in the market. Some of the big ones that we cover as well. The biggest, which is now called Arcadium, LTM, and also the likes of IGO. So similar models to IGO, Pilbara, where they're well cashed up. The lithium business doesn't owe them any money. It's purely a cash flow business. So it's a matter of just increasing those profits as that spot price recovers. That's really the key fundamental at the moment. Our team, Pat?
Yeah, so our team, so it's just put a little bit of context around Angus Geddes, founder, CIO, Patrick Ganley on the presentation with you today. We've got Andre and Andrew on our research team, which a lot of you may have heard them when we do the research webinars. Chris, account manager, a lot of you may speak to him or will speak to him over time. Ed, who's on the webinar with me today. We've got two other very experienced account managers in R2 Collins who kind of round out the a big part of the team. We've obviously got some other people in wealth management, some people in the accounts department, but here's a core group as a team. Most of these people have been in the industry for a number of years and offer a lot of value and can be of a lot of assistance to retail investors.
Yep.
Our friend Warren here, the best investment you can make is an investment in yourself. The more you learn, the more you earn. Invest in yourself, and that might be investing in a Fat Profits membership to help you learn and put you in a position to make some money as we move through 2024 and beyond in what we think are going to be a couple very, very, very good years for the market.
Just on that, Pat, we are a very experienced team. So in the industry, it is quite junior at the moment. We do have a senior team here, so that's been our cornerstone. Is that I've been here since 2011, so I'm going on. I've lost track. Is it 13 or 14 years? I'm going on 14 years. So yeah, I really enjoy the day-to-day interaction with our members. I primarily look after the portfolio service at the moment, which offers members an annual portfolio review. So it's usually offered as an upgrade for existing members, but we can offer it to new members when they join as well. So it's for members that want a bit more support, one-on-one, to be able to discuss their own portfolio, their strategies, and get some opinions from us, and also ask questions about stocks throughout the year. So it gives you direct support. So that's available down the track. So now we're moving into our service. The way you can get access to our service and access to all this information and resources that we presented today is to take out a subscription, a membership. The membership, a lot of our members invoice their super fund or put it in their personal tax returns as they manage their own investments. So there's 3 memberships basically. It's a standard membership, which gives you one report, either the Australian equities or the mining or global, and that comes with the daily fat chat. So with that membership, usually members that have been in the market for a long time and happy to read the reports and use that information with their own investment strategy, will be happy with the standard membership. Other members might like a bit more guidance and direction and speak to us as account managers and get a bit of support over the phone or on the emails. So we've got the premium membership for that, and that also entails 2 reports. Most people take mining or global equities with that particular membership. And then we have the platinum membership, which is all of our reports, which includes Australian equities, global mining, and also global equities. You get a premium account manager, but that's also can be upgraded to our portfolio service. So if you're someone that wants an annual review of your portfolio, a second opinion on what you're doing, and also have some direct support where you can ask questions throughout the year, either on email or phone. I get a lot of emails every day, you can imagine, 50 emails a day. And so I answer a lot of those questions directly with the member and discuss those as well. And then we've got other members that have our phone numbers that would simply just pick up the phone and give us a call. If we're busy, they'll leave a message and we'll call them back. So the offers, we obviously want to give you an incentive to join for spending time on this service. Most people watch these webinars for the first time because they are reviewing our service and they're considering joining our service. One thing I will state is that we are not a direct marketing business. We're Australian owned and operated. Been doing that for 25 years. We have skin in the game. We have a wealth management department, which has a few $100 million under management. I'm not sure what the exact amount is, but we have about 7 separately managed accounts. We have about 3 listed funds, and we have at least 2 unlisted property funds as well. So we have money in the market. We don't provide insights. We provide research on companies and direction in the market, macro and direct company research. And a lot of those companies that we do advise on, we do declare that we actually have money invested in those stocks that are in our separately managed accounts. Okay. So standard membership 1 year, we're offering a reduction in the fee today. So anyone that joins off this webinar today can join us for 1 year for $7.95 on a standard membership, $1,100 for a year on a premium membership, and $1,500 a year on a platinum membership. If you commit for 2 years, we'll offer you a further reduction in the fees. So a standard membership, $1,300 for 2 years. That's probably the lowest offer we've made for quite some time. $1,800 for 2 years on the premium. That tends to be our most popular offer. And for savvy investors that want to pick our brains throughout the year and get a second opinion on their portfolio and also get some international exposure, we'd usually go for the platinum membership. So that's basically the offers that we have available. Outside of that, email us, give us a call. Happy to discuss further before you commit. If you want a portfolio checkup, as a new member, if you've never used the service before, we can provide you this service, but we need you just to go through a month of using the service first, understand that, reviewing our portfolios on the website, reviewing the daily research for a couple of weeks, and then once you're ready, you can send in your portfolio. So we usually give at least a month before we can offer the portfolio review, just so you really understand our service first, understand the stocks that we prefer in the market and which ones we don't, before we actually discuss your portfolio. Okay, so we'll just put the poll up, Pat. If you're interested in joining, please click standard, premium, or platinum, or if you're interested in discussing a portfolio review, click that. And if you need some more information, you'd like to discuss the service further with us, please click need more information. So this is not a survey, which one you would prefer, it's which one you would be interested in possibly taking up today once you've spoken to us over the phone. Okay, so we'll leave that one up, Pat, for a little while.
Yes, we've got a few people clicking, so we're just going to give it a little bit of time here. And it seems to be that typically in these, it's usually the premium service that most investors look to start out with. And from my experience, it's usually a 2-year membership to take out. Our recommendations are for the medium to long term, so anywhere between a minimum of 12 to 18 months, and we could be in these positions for anywhere between 2 to 3 years, and we think that's the strategy and the way to make money. So a lot of new investors come on with that premium, and they take a 2-year membership to join Fat Profits, and the pricing is quite attractive today.
Yeah, just on that, Pat, for our members at the moment, we are offering the portfolio service as a 3-year package. So we like to work with you over a couple of years with an end result. So it's basically a renewal of the reports, and then we just add the portfolio service for you. So, and it doesn't really cost a lot more than a standard premium renewal. So that's quite a popular option at the moment. So if members have a self-managed super fund, or new members, or some of our past members that are coming back, We can do longer than 2 years, but generally 2 years is the average. We can go up to 5 years for long-term members, and also for past members returning that have had a long-term membership in the past as well. But most people try us out for at least 1 or 2 years on either standard, premium, or platinum.
Okay. I think that's been enough time. We've got quite a few responses. We're going to close the poll now. So we think we gave everybody enough time to do that. And the poll is closed. And we thank all those.
So I can see, yeah, I can see, Pat, a lot of past members are on this. I can see registration dates. I'm not sure if that's when they first registered or they've actually been a member. Like I can see 2006, 2009, a lot from 2010. So we have invited in this particular presentation, people that have been in our database for a very long time. So it's good to see those people come back and still interested in reviewing our service and hopefully possibly joining after this webinar presentation today.
Okay. And again, we're offering new members up to 50% off. If you have any questions, as always, you give us a call, 1-300-88-1177. You can email us members@fatprofits.com.au. We still want to provide that personalized customer support. So if you join, you can ring us. You got a real person to talk to, and we're here to help you. You want to send some more questions through, please do, and we'll endeavor to answer. We hope everybody enjoyed the presentation today. We look forward to welcoming you as a member. If you want to talk to us about any of the offers, please give us a call, and we'll try our best to do the best possible deal we can. And we hope to help you with your investing as we go into the next couple of years in what we think is going to be a pretty good market for people to make some money in, which is what we're all here to do. And with that, we'll sign off, Ed. I thank you for your time. I thank everybody for their time during the session today, and we hope you've got some value out of the presentation.
Absolutely. Happy investing. Looking forward to welcoming some new members on board. It's been a really good start to the year, so we've got a lot to get through over the next few months, and hopefully you can join us for that journey.